All right. Good morning, everyone. Happy Tuesday to you. It is July 14th, 2026, and this is the audio edition to the Daily Trade Strategy Briefing. NFA Compliance Rule 2-29C Subparagraph 1. Trading in futures is speculative in nature and involves substantial risk of loss. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. Past performance is not necessarily indicative of future results. Very good. We'll get that out of the way. All right. Lost audio. Everybody still good with audio? Good audio. Okay. Very good. All right. So today begins a new cycle. And we did have a positive 3-day cycle. The 3-day cycle statistic. We just put that up on the screen for everybody. Now, this is my tracking sheet of the 3-day cycle. And again, there's a lot of data in here, but what we'll do is we'll zoom in, particularly on the left-hand side here. And as you can see here, this is where this is the current positive 3-day cycle, right? 93%. Again, what does that represent? Once again, it represents when price is greater than cycle day 1 low, okay, on cycle day 3. Okay, that's the core definition of it. So price just needs to trade above the cycle day 1 low, right, on cycle day 3. That does not imply that the targets, the ultimate targets, okay, have been reached, but just rather that the price is above that cycle day 1 low. So that's a pretty good statistic, certainly. All right, but we certainly want to know, when the average target gets reached, okay, what's the average percentage of that target, right? So you can see here in this statistic, right, 181% of the average range, right, and the average range is 99.32 points. That's the average range. So the average range is what? That is CD1 low, okay, up to the CD3 target, right? So this full cycle target range, right now the average of that is 99 points. And this is covering, this particular sheet is covering 3 years, but it is equivalent to, matches pretty closely to the 15-year historical tracking that my partner Rich has on this. So again, these are some statistics about the cycle. All right, and all right, so just wanted to kind of pass that along since we're beginning a new cycle. So again, the objective here for the new cycle is to establish, since this is the cycle day 1, is to establish a low from which to rally. Okay, so again, the cycle day 1 low is not fulfilled, or is not in place rather, until the end of the day. All right, so here in the overnight, we can see, so this was cycle day 3, and we saw yesterday we had, some chop in the morning, and then the remainder of the day the market just kind of drifted lower, closing at or near to the lows of the session. Now, this is how I read it, right? And again, most people will read it this way as well, that have been around for quite some time. If the markets are closing, in this case, yesterday, last and low, near the lows, the expectation, right, is for some what we refer to in the business. I've used this term forever, right? A spillover, right, or a spill, right, just for short, right? Just use the term spill. Again, I used this term when I was a market maker. This is how I was taught back in the day, right? So when when we're talking and somebody that's not in the business hears two guys that are in the business talking about, oh, the spill, right? The guys in the business know what they're talking about, but nobody else does. So it's just the kind of, the vernacular that we use. But anyways, the idea here is we're looking for a spillover into the next session. In other words, so if the market is closing low, we're looking for that spillover even lower. Okay, so you can see here during the overnight session, all right, today, the market actually, look at this beautiful candle right into the D level money box zone, okay, and also a cycle day one projection low, so 36s, right? One of the targets that I had on the sheet with 35s, right? I like to do 5-point increments. I don't like to do a target is 36. I just do 35 because it's always plus or minus 5 anyways. So notice what happens. Price bounces off of that. Again, all during the overnight. It's voodoo. Yeah. Right? But all during the overnight. And then the remainder of the overnight into early this morning, we got a little bit of a pullback here, right? And again, held the prior low now. And of course, this is the CPI print. All right. And we got that smash move up to, 15s on the high tick. Keep in mind that 76.10, right, multiple times throughout the morning yesterday, right, and up here as well, right, marked some key resistance, right? So we will use the word resistance at this point because that's what it proved to be, right? It proved to be some key resistance. So sure enough, markets, jam up this morning. Those that know, right, are aware and mindful of, that 10-15 zone. Okay, and look what happens to price. Trades up there, immediate rejection. Immediate rejection. Okay, so again, why I point a lot of these things out is because even though we may not trade there this morning on that print, okay, you at least should understand that, hey, that was a key resistance area yesterday. Could be again today, even before the CPI print. Does that make sense to everybody? I want you to start thinking this way, all right? I want you to start thinking this way. Just don't come in and let the market kind of, whip you around like a rag doll, right? But rather, again, a rag doll metaphorically in your head, like, geez, why did it stop there? You know, again, in preparation, you ought to be looking at these things, right? Where did the price go? Where was it resisted? Where did the market find, buy response, right? I.e. support. Okay. What levels? How many times perhaps? Sometimes multiple touches reinforces a level, right? If you recall yesterday, for those that were around, 76.10, I quoted early as a sandbox edge, right? Now, I didn't know if that was going to be the final, you know, resistance point, but in real time, remember, we're just doing what we do every day. We're just identifying edges that appear that the market is responding from. And then if and when those edges change, that sandbox edge, okay, we're going to change with it, right? So we're not trying to necessarily predict that, oh, that's going to be the high area. Never, never have, never will. I'm not even going to go down that road because it's just a waste of time, energy, etc. What we can do though is, you know, where appears to be, the market finding, responses, buy responses, sell responses, right? I know I'm repeating a lot of this stuff you've heard before, but many of you have told me time and again, keep repeating what you're saying. Sometimes I do feel as though I'm a broken record, but I've gotten a lot of responses say, please repeat what you're doing, what you're saying. Because also, not everybody has the same time experience with us, right? Some of you are relatively new, within the past year. Some obviously have been here multiple years, right? But for those of you who've been here multiple years, I don't change what I'm talking about, right? I am, everything that I teach, talk, analyze, everything is really the same way, right? It's just one to keep us in alignment at all times, right? Sometimes the market's tough to read, keep us in alignment, try to identify, those key areas, those key levels that the market's responding from, so we can then begin to use those areas, as decision points. Okay, there's Raj. Raj is with us again today. Welcome right back, Raj. Yeah. So exactly. So Raj and others have been with me a long time, and I just don't, deviate a whole lot. I very little deviation whatsoever, right? And why is that? Is because I think how we approach the market is um, certainly not the only way, but it is our way, and I think our way is pretty darn good. So so we'll just keep doing it, as we have been. Right. Okay. So again, the market has been, as I quoted in there, I'm not going to repeat my terminology. You can read it. Don't want to offend anybody, but you know what I'm talking about. The CJ. All right. The big CJ. The market's been in a big CJ. Right. And again, you can see here, it is has been what it is. Right. So, geez, I just feel like Kalama Harris there. It has been what it has been. In any event, so we're still kind of in this middle here. We get the 3-day central pivot zone here. All right. What would need to change to break out of this? Well, of course, we would need to, get above, you know, right now, call it 76, 10s, 25s, 30s. I'm not going to quibble over the actual price, but that zone price needs to get above, the multi-day MD here, multi-composite or MC multi-composite, right? Value area high, right? Which is right there, 707s, 10s in that area. So what the bulls need to do? Clear and convert that. Bears want to obviously, keep that contained, and they want to, try to break lows, but it seems that, BTFD, buy the F and dip strategy, continues to be the dominant strategy. And given the CPI print this morning, although initially positive, obviously there's still some consternation regarding whether or not it's a temporary aberration of lower inflation in the face of all this, oil, you know, back and forth. So we'll see what happens. But we all know oil is very volatile component of the CPI, right? So, a lot of times they tend to discount a lot of that stuff. So let's see what happens here today. A10 is open for a long. That's down at 75.65. And let's have a good day. For you guys in crude oil, excuse me, opening range crude oil is short. All right, and I think we got everything, all the bases covered. All right, so as always, what we'll do is just, again, identifies, excuse me, some key references. Right now, of course, VWAP, right, is a key reference. And there's a high volume node right around those areas, 60, 65, right? So we'll see how the market wants to respond in those areas. I don't have a core lean at the moment. That's a bit too early, perhaps. So give it a chance to show us what it wants to do. That that big CPI spike print. You know, again, when you get a big print like that, you want to see it absorbed. You want to see it. What the real intent is. Right? All right, so 75.60 is an 810 area. If you're interested, if part of your plan is trade 810, let's see how that fares for us. Oris, regarding, and everybody for that matter, but I was just directing my comment to Oris. Regarding the cycle trend, I know you made some comments about it earlier. Be sure to watch the video on the cycle trend if you have not. All right, what you want to do with that is, okay, you did see the video. Okay, so that's good because I want you to make sure that you understand the nature of it, of how it, what's called ghosting. Okay, so it comes, it goes, it comes, it goes until it's locked in. So you understand the how it's developed. But yeah, it's a good confirmation tool. Yeah, just review that portion of it just so you understand. Again, it's based on sine wave analysis and stuff, but there's also what's called a pivot strength on it, and it needs to price action needs to kind of maintain that a certain strength until it finally locks in. But yeah, it looks kind of somewhat magical in that it really identifies the high low kind of key pivots. Um, so I don't use it on its own. I use it more in kind of conjunction with other indies and stuff. Yeah, yeah, the Fourier analysis, right? So just something to be aware of. Again, knowing how these things work, right? The mechanics of them, they can look pretty impressive, on the surface, but you really need to know. It's like looking at a Hemi engine, right? And you just need to know, how it, or any engine, you need to know how it functions. You know? Yeah, cycle trend plus the bull bear stack has been out. So, yeah, and again, when you get, yeah, sure, when you get a lot of confluence, it does strengthen up, the decision process. All right. So again, we got kind of a high volume area. We got VWAP right here, right? Obviously, VWAP can be a very important area to note. And what are we doing? We're getting some sort of, response, right? So one of the things, the idea of using VWAP, right, is when you get kind of this, kind of a big move like that on like a CPI print, certainly you don't want to chase after that because then, you're just chasing dreams. And like we all know dreams can turn into nightmares. But you basically want to say, well, where's the average price, of all this action, right? And again, it's I can't understate or what is it, understate or overstate? I always get those confused. But the VWAP is such an important marker. I guess understate, right? I can't understate it that it's important, right? Because all the institutional players, doesn't matter who you are out there, as an institutional player, right? They reference the VWAP, right? They reference the VWAP, so it is absolutely an important marker. So if it's an important marker, obviously we need to also reference it as an important marker, right? Oh, okay. Overstate. I always get those mixed up. Thanks for the edification. I think I missed that English class. Okay, I can't overstate it enough. I got a review of my grammar class. All right, you guys on crude oil watch. You got take profit 2. All right, hit. I'm gonna move stop down to target 1 level. Lock that sucker in. ES got stopped out. I was so fast that It didn't even hurt. So fast, it didn't even hurt. All right, so VWAP there at 65s, holding support. So early VWAP at 75, 65. All right, so that marker becomes important now for us, no? Also, it's the breakout point, by the way. Again, if you take a look at your charts, that was kind of the breakout 65s when the CPI print came out. So what did it do? Back to the scene of the crime, right? Right, there's your breakout. Okay, scene of the crime. Retest on the breakout. It's just what it does. I can't tell you the reasons why. It just what it does. All right. So obviously we'll be continuing to maintain an early long lean. All right. So early long lead if when price shifts to a bear mode. Now again, that doesn't mean that markets were breaking out from that big range. Remember, we're still within the CJ range. All right, we'll call it the CJ range. Well, you'll have to take a look at one of my previous posts. 836, Rom. Take a look at 836. Oh, 836, not 26. Sorry. All right, so buyers are still there. They love it. Can't get enough of it. Oil coming back down from the 80s. That little dip to about 75, 77 zone was it. Again, the A4 grabbed it. Got a piece of it. Right. Stop up. All right. So we're stopped out on the balance of that. Not a bad little quick trade there, right in the middle. We'll take that. I think with these recent rhythms, anyways, I think the approach is if we get, if we get something out of it, it's always great to always be kind of looking for that big runner, right? And certainly, we want to do that because we never know when that runner's gonna, you know, uh, rear its head. But sometimes when we get these rhythms, as we do, try to work for that runner. But if it comes back like that and gives us a stop out, for a win, just take that, right? Just take that. So Okay. All right, so now we're just sitting here in the middle of chopping away, chopping wood. I think it's going to be a low comment day, unless you guys have any questions. All right, on the crude oil, let me just pull over the crude oil chart, opening range. So we did get our 3 targets there on crude oil. All right, over here on the ES, did get stopped out on the opening short. It just kind of reversed quickly. Didn't give us anything there. Short of NQ, kind of chopping around in the middle as well. All right, right around the opening. Doesn't look like, you know, going to be too successful there, given what happened with the ES. But again, we'll see. Anyways, the gap up there got faded on the crude oil, and that offered a good trade there. Price right here in terms of the options levels, the volatility trigger is right here at 75.81s. So the gamma guys, so pretty much kind of that's where we're just chopping around. It's also within the 3-day central pivot zone. All right, and for me, the way I'm kind of reading this, given we're also in the middle of the range, it's all neutrality. It's like Switzerland. Don't want to take a side. Pick a side. So these little middle areas like this, these are the toughest parts. Okay, because again, you get a lot of, just chugging back and forth. Everybody's trying to, kind of position for what they believe the next move will be. Some are looking for the continuation move. Some is a fading that move. Again, it's just kind of offering just kind of a really, kind of I kind of refer to this area as kind of rock'em sock'em robots, right? With one arm tied behind your back and just slugging it out. Putting up NQ on the left hand side there to monitor NQ as well. All right, we may come down and test this 810 here, so keep watchful eye on that if that's on your scope. VWAP still responding, it looks like. But not getting a real solid, kind of push and response. Just kind of just responding, chopping away, still chopping wood, chop, 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 chopsticks. Yeah, exactly. All right, keeping a watchful eye here on the 810 coming into view. Not much of a response. All right. Yeah, that didn't just kind of blasted through the 810 again. These rhythms, these chop chop chop, and they, break one way. Not, not the easiest rhythms, guys. I mean, they really isn't. Yeah, not the easiest rhythms. I mean, we could see it kind of slipping and sliding there, against uh, the fair value zone, right? Yeah, it's been holding every time it kind of popped up into that 3-day central pivot zone, right? You can see where the change, did occur. This, even though it's kind of slow and grindy here, right? But you can see this kind of, that 89 EMA, right? Again, continued to, hold, right, through this whole area. And then notice when it finally broke, right? Again, you know, it you see even though it was kind of slow and grindy, you could see the definitive change in character, right? Here again, that 89 is such a, at least on this size chart, is such a critical EMA to hold, above or below. When that thing gives way, there's usually, it's going to be a change of character happening until they flush it out, and then now they snap it back, right? They got to flush them out. I mean, even if you didn't have a trade, okay, but you're just monitoring, and one of the questions you can, continue to ask yourself is what side of price is trading, what side of the 89 is price trading, right? And then the next, would be uh, looking for, changes, right? The shifts of that 89. And again, notice another time zone right around that 10 o'clock, 10:05 area. Again, that tends to be a time zone where things can change, and they just get us out enough where flush them out, and they can bring them back. It's just what they do. They love doing it. Yeah, yeah. So again, you got the BLT, right? Basically, right? BLT in here, right in here. Yep. John South loves the BLT. Mhm. Okay. All right, John had the best trade this morning so far. All right, not very productive so far this morning, everyone. All right, the theme of the day, old blue eyes, summer wind, for your listening pleasure. Woohoo! Look at that. Now what? Looks like pretty fast snaps and traps here. Now what? Maybe that's just a stop run. Maybe that's a news event. I don't know. We'll see. Yep. Yeah, I don't see any news associated with that snap, but maybe there is. Could be just a quick short press, stop run from that push down. So again, once again, I just wanted to, highlight, right? Again, I've been told again to continue to repeat, right? So look at the 89 here. Down, 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 down. Look where it shifts. And then what happens after the shift, okay? That 89 continues to act as, right, support on the dips. Back to it. I think that's where the greatest opportunity has always been, in the change, right? Because what do you have over here? You got shorts, right, that are trapped, okay, and then new buyers come in, right, and then traps, shorts are trapped. So maybe this was a stop, you know, stop run. I mean, I don't know. I'm just making an inference there what happened, but you can clearly see that this it was probably what gets happened here, right? Longs flush out, okay, probably get some shorts trapped. It shifts, new buyers step in, okay, and seeing the shift, shorts are still like, I don't believe this until they're finally stopped out. You can believe me, you cannot believe me. How often we cut winners off at the knees and let losers go to the grave. Yeah, Dr. Dean says. How true, right? How true. Yep. How true indeed. Guys, I'll be right back. Just gonna step away for get some refreshments. Be right back. Yeah, I seem to be good with Sierra chart right now. I don't have any issues that I can see with connectivity. Really, you having issues with the cheating connection? That's rare. That is really rare. I seem to be good. Yeah. Okay, you got it connected now. Okay, yeah. Can't say the same about Ninja Trader. All right, so some movement back and forth and just kind of hanging out here once again. More of a consolidation day, it seems, right? But we've been getting quite a number of those. All right, got some snappy action back and forth. Seems more like a trader's market than an institutional uh, demand market. Yeah, today's rhythm is a bit more reminiscent of a trader's market versus an institutional one. Again, it just seems as though there's a bunch of snaps and traps kind of going on here. All right, I guess a little blip of news here just came out on that. You can read it here. Trade deals versus a fee. So I guess I just read through that. So I guess that appears to be obviously, a much better deal than just a quick 20% usury fee, the VIG as it's called. So maybe the market likes that a little bit better. You got to say whether you like him or not. He's innovative. All right, so guys, we're staying focused here. Again, with all the snaps and traps, but yeah, tomorrow will be something else. Um, we'll see how much time that lasts. But again, we'll just kind of continue to maintain kind of the excuse me, the long lean for the most part. Not an easy day to trade necessarily. Some good opportunities if you're quick. Again, staying in alignment, right, with that 89. I just can't stress it enough. That's just one of the key moving averages that actually continues to perform. Again, just staying in alignment with that, pull back, to it. If it dips below, reclaim of it, things like that. All right. of course, when the price, snaps real quick back and forth, it disrupts, some of the flow, but that flow gets corrected, and you just wait for the retracements, wait for the pullbacks to them. Again, think of one thing, right? Does anybody like to overpay? Let me ask you a general question. Does anybody really like to overpay when you're out there in the world, right? Everybody talks about inflation, you know, the higher prices that you have to pay and all that. But, the idea is nobody really likes to overpay. Though I don't find any argument with anybody that would say, well, I don't mind paying a fair price, right? I think everybody would generally agree a fair price. And of course, we love discounts. Who doesn't like a discount? So when you take a look at the EMAs, right, particularly the 89, that, at least for me, if for over the years, sorry, my voice here is going, that's been my proxy for determining whether the current price action, is either fair value, overvalued, discounted value. Of course, the direction matters, right? If it's sloping upwards, if it's shifting, sloping upwards, well, that means prices have pushed above that 89 and it's causing that shift. So then a pullback to that 89, okay, in the early portions of the shift. Remember, it's the early portions of the shift. So we can identify those fairly easily here, right? Remember, we're looking for the shifts that happen, and then we're looking for the early moves back, to the shifts, right? So we got, EMAs there, so into the fair value zone there, this shifts, so we'll move back up into those areas. That's fair value, okay? Again, fair value here, right? Fair value slash discount, there, okay? So, I mean, we can literally identify these areas, right? But what the key thing is, when you see this stuff shift, so when we get this price pushing up here above that EMA, ask yourself, what's that going to cause the EMA to do? Right? You see where I'm pointing, right? So price pushes above that EMA. What's it going to cause the EMA to do? It's going to cause the EMA to start shifting back, higher. All right. So we got to think about what the cause effect of the price action is, right? And so when that happens, we just want to say, hey, I want to. Again, it's so easy, it's hard sometimes, right? So let's put it say it's so simple that it's hard, not easy, right? It's so simple that it's hard because we're trying to like overanalyze all the time. What's happening, the news, all that stuff. Right? Market, moved quickly. What's going on? We're always trying to find reasons, right, for the price action. Don't look for reasons. It doesn't matter because whatever the reason you find and you seem to be satisfied with, it may not be the real reason. So all of a sudden you have false information, right? You know what the information that's not false? Price action right on the screen. That's not false. If there's anything pure that you can rest your hat on in this crazy world of, you know, fake news and opinions and everything else, okay, it's just looking at price action. If you can really, think about this for a second. These kind of the closing thoughts here for the recording today, right? If you can really work on eliminating external influences, external, data coming in, whether you're watching, Twitter, X, you're looking at other people's, what they're doing, and and all that other stuff, right? It kind of, again, causing all those distractions in your head. You can really eliminate those, right? And really, really just focus it down to a few different things, right? That actually are truthful, right? And factual. We're always looking for facts. Well, you're not going to get any greater facts, right, than um, looking at the actual prices that trade, right? So, for instance, like if you take a look at the DOM, right? So you take a look at this DOM. So you get the DOM over here, right? And you see all these levels of prices, right? The depth of market, all right? The depth of market. This is all fugazi. All these prices here, all these quantities, not the prices, but the quantities at those prices, it's all fugazi. Why is it fugazi? Right? They're just all what I refer to as IOIs, indications of interest. Yes, are they real orders at the moment on the book? Sure, I won't dispute that. But the reality of it is they're not actual trades. They're just indications. Oh, I'm going to place an order here. I'm going to place an order there. And in an instant, those orders can be canceled. So what good are they? What good are they of reading it? Oh, look at this. There's 120 contracts being bid for here at 75.90. Well, there's 110 above that at 90.50, in the aggregate, right? What do those really mean? They mean zero. Absolutely zero. All right. You're talking to a guy that changed quotes on their screen when I was a market maker back in the day, right? They mean zero, right? They're indications of interest. They will change in a heartbeat. All right. A possible game of liar's poker. Yeah. Right. So they're again, why people have those on the screen and the DOMs, and they try to keep pushing, you know, the depth of market. All right. It's all smoke and mirrors. It means nothing. At least from my opinion. Somebody else has a different opinion, fine, not a problem. I respect everybody's opinion, right? But from my vantage point, it means nothing. What truly means, if you're going to do anything, right, is look at the actual order flow, right? Now, order flow meaning the trades that have occurred. That's meaningful, however way you view them, because that's actual commitment. Those are where trades did actually occur. We know that. So that's more meaningful. If you're going to read anything and trying to interpret what's going on, okay, I'm going to use that instead of just a DOM that's showing indications of interest. That's why I don't even really care. I have the DOM as a backup because it's actually on a different connected server versus a chart. But it's like looking at the one-armed bandit. You know, I don't really care looking for it anymore. What I'm doing is I'm looking at the price action. Where's the average price? What's price doing relative to the average prices, right? Are we trending up? Is there a first pullback idea, right? Is it holding a pullback, into an area or zone, right? An EMA zone, things like that. Again, those are part of a more consistent decision process than looking at a DOM jumping back and forth, right? So let me ask you. I know some of you trade. I know some of you trade NQ. So here's NQ. Here's the NQ DOM. Tell me how you can trade the DOM, please. How can you? To me, how am I trading that DOM? right? See how fast this sucker's going back and forth? I can't make heads or tails of it, right? And then it jumps off the screen. It'll come back, but it jumps off the screen. This is crazy, right? That's just crazy, you know. Your PTG bid ask volume ratio is not on the DOM. It is not the DOM necessarily, right? The bid ask volume ratio, is volume, okay, but it's not, all the volume that's, it's all kind of contained, right, in the DOM. But my point being is, right, my point being is how do you read the DOM, the order flow on the DOM with the markets jumping around like that? I can't. I can read, I'm more interested in, what's the average price of the, the volume and price doing, is it being accumulated? Is it being distributed? That type of thing, but not on a price by price basis like I'm showing in the DOM. Right? Those things just jump around like a jumping bean. All right. And so, I mean, ES is a little bit slower, not much, but it's ES a bit slower. But the point is, it's like, if I'm trying to scalp off of a DOM, and looking at that jumping back and forth, for me, anyways, and I used to keep in mind, I'm somebody that used to trade the DOM all the time, and today it's just, I don't, I can't keep up with it. That's a lot of information to process in your head, and it's extremely exhausting. So I would rather, look at, the chart here and say, hey, I got the 89.34 fair value zone shift bullish. Price is a little bit above it. If it pulls back to it, okay, I'm going to look to buy it. Again, that's a slower decision process, the OTA loop, and I think for me anyways, it's a much more efficient one, where I can identify an area price point that if price comes back to it, right, that's what I want to, execute around. All right. Yeah, at that point, can I put an order on the DOM? Right, if I want, sure, but it's so much easier to do it on Chart Trader. It's so much smoother, right? I mean, just right click and just, put a buy limit, bracket order, whatever you have, all right. It's so much easier to set that up, right? And that will show on the DOM, but I don't need to look at the DOM. Yeah, I like the histogram. So the same thing, like when you're looking at order flow here, okay, and this is on, I don't know, it's the 5 minute, I think. Yeah. So, even on this, right? Actually, let's try to go to a bigger chart, right? So even when you go on a bigger chart, so for instance, right? So I don't really care about the numbers themselves in the columns. Yeah, if they're white, that means there's more dominant buying. If they're red, there's more dominant selling. But again, a lot of times they're matched, right, for the most part. What am I interested in when I'm taking a look at an order flow? This is a 30-minute. So if I'm taking a look at order flow, I'm not interested in the numbers, right, in the columns. I'm not interested in them. What do they mean to me? Absolutely nothing. So why should I focus on them? I shouldn't. What am I focusing on? I'm focusing on the profile. Okay? I'm looking at the profile. Just as if you were looking at a profile on a daily chart, why can't you use a profile on an intraday order flow chart, candle by candle? Of course you can, right? So you can see in this area here, there's a high cluster of volume. right? So when prices start, so the prices opened up here, traded up, came back down, okay, closed there, but when it opened, right? So when it opened here, it traded down a little bit, right? Well, you're in that high volume node. What happened here? There's a lot of, you know, confluence there, back and forth, right? So you can identify, like, well, if price pulls back into the zone again, if you're trading in, entering in high volume areas, you're more likely to have a better, uh, potential outcome, right? Yeah, you can use the deltas, right? These are the delta bars, the numbers at the end of the bar, right? So what's the delta of that bar, whatever it is? So you can use the delta, and again, you can make an assessment, all right? But those number bars can be summarized by a delta, yes. But when you need Niels' trader software or something else, yeah, Niels' software is great. The Trader R, right? But again, if you want to know, well, what happened at the end of that order flow? Okay, so you can take a look at that. But again, looking at order flow can give you, um, when I'm looking at it kind of in this way, when I'm looking at it in terms of, the profile, not so much the actual numbers inside, because again, it's to me looking at these numbers here in these columns, right, as they're unfolding. To me, it's similar to looking at the DOM, right? They just bing, 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 bing going. I'm more interested in, how is that volume being distributed? Okay, how is that volume being distributed? And so then I, add that to, the structure I'm looking for, etc., and then that can be a little bit more meaningful. But the decision process is a lot less, chaotic when it comes to that. When you're doing stuff like that. This, yeah. So what you'll see here on this is you'll see the yellow marker, right? That's the point of control for that bar for that time period. All right, so you can identify that pretty quickly. All right, yeah, that's the POC, but you can also see it as a high volume node right in there. All right, so either way, uh, right. My point to all this is that you don't want to necessarily have to use, looking at the DOM is just it's just very exhausting. And you can see even on a 5 minute, you can see here, right now here, this was a negative bar. Okay, we had actually slightly negative delta, very little, right? And then we got a positive bar here, closed back on the high. So this basically negated that move down. So then when you roll over into this bar here, right? Well, this was a closing strong bar. So, maybe on some sort of a dip back into the range of the prior bar, okay, you know, buyers will, continue to reemerge, right? So you can kind of use that, and then you can take a look at, well, and again, it's just bar reading, right? Just going back to, what happened if this was a long tail, and then we're retesting it. You may get a rejection there. I mean, there's a lot of ways that you can, use the order flow. But I don't, like I said, I'm not interested necessarily in the numbers themselves, right? Because that is, naturally what you'll see at the end of bars, very little numbers, versus the middle of the bars. That's where you're going to see the concentration. That makes sense, right? So again, reading order flow is very much an art versus a science. I mean, there's some things you can look at, but it just takes an enormous amount of screen time. And that's why I don't teach order flow. I mean, I'm obviously I'm very learned in it myself, but I don't teach it because it's just other, other folks out there probably have better ways of teaching it than I. It's just an enormous amount of concentration that's required. You can do it in very small bursts, like maybe not staring at the order flow all day because again, we talk about we talked yesterday a little bit about staring at the screens, right? The stereogram idea, right? You start seeing, illusionary patterns. So you really want to, look at the screens, kind of when prices are, when the patterns that you're looking for are coming into developing and coming into play. Other than that, just let the prices just bounce around. Don't take a look at the, prices as intently. Outline them, frame them out, things like that. You know. Yeah. Thank you for the compliment. Yeah, teach very well, and when there's the juice is not worth it, the squeeze. We need their better tools. Yeah, that's the idea. I mean, some people gravitate to order flow naturally. That's just their natural inclination, and there's, it as the saying goes, right? There's an app for that, right? So if the order flow, delta order flow, footprint charts are your way to go, and it resonates with you, boom, you know. And there are other tools. That's why we have, and we call it a toolbox. There are various tools. Some people like certain types of tools, versus others. Some people like, craftsman tools. Some people like Makita tools. You know, why? I don't know. Ergonomically, the way they fit in their hand. You know, a hammer's a hammer, right? Well, I don't know. A craftsman hammer versus a Makita hammer or a Kyobe hammer or whatever, feels differently to them. But they're all hammers. The idea. So today's rhythms are tough. Yeah, that's kind of what I was stating earlier about, the kind of snaps